Hello everyone, my name is Jerry Yu, the Family Money Doctor. Thank you for watching my video today. I have recorded a video in the past talking about the rule of 72. Basically, this formula illustrates under a compound interest environment how fast you can double your principal. Albert Einstein called the compound interest is the eighth wonder of the world. In my Rule of 72 video, I have talked about using the formula to calculate how fast your money can double, and the video shows the longer you keep the plan, the compounding power on the last double is quite amazing. However, although compounded interest is a great tool to let money make money for you, but what I wanted to share with you today is the tax impact on your return and the long-term effect on your money growth. Before I continue, I will be very grateful if you can click the like button and the subscribe button, so when my new video is released, you can watch it immediately. Let me briefly review the Rule 72 with you. And I'm just using an arbitrary interest rate to illustrate the math and how this Rule 72 works. 72 is a fixed number divided by the interest you get equals approximately how many years your money can double. For example, in the illustration, let's say that when you are 30 years old, you have $10,000 and you invest this money. Let's say your return on this investment was 4%. 72 divided by 4, the number is 18, which means when you are 48 years old, the $10,000 principal would double to be $20,000. Another 18 years later, you turn 66 years old, your original $10,000 will become $40,000. And when you are age 84 years old, the $10,000 principal will double to $80,000. And this is the math to calculate the speed of compound interest. And here is the illustration to show if the interest is at 8%, your money will double every 9 years approximately. See, at age 84, it will increase to $640,000. And here shows what would happen if the interest rate is at 12%. Again, I'm just using arbitrary number to show you the math, okay? See, your money will double every 6 years. At the age of 84, it will increase to $4.8 million. So if you invest $10,000 when you are 30 years old and don't touch this money, at age 84, it can potentially grow to be $4.8 million. And I'm sure you will be very glad that to invest that $10,000 54 years ago. However, we all have our least favorite relative, Uncle Sam, come to visit us every year. Also, I have cousin California knocking on my door every April 15. Let's say every time your money double, you need to pay 25% of the taxes. What would the number look like? I'm using arbitrary rate of 25% just to show you the math. Okay, let's look at this illustration on the right side. Let's say hypothetically, your return on the investment is at 12%. If you invested $10,000 at age 30, after 6 years, at age 36, your $10,000 made $10,000 on the interest. Your ending balance should be $20,000. But if you look at the number on the left side without the tax implication, you can start seeing the difference. If you look at age 84 years old, you have to pay 25% of the taxes every time it doubles. Your original $10,000 will increase to $1.53 million. But compared to the $4.8 million on the left side, the difference is about $3.3 million. I'm using this exercise to show you that although rate of return on investment is very important, but tax planning is even more important. Do you have any tax-free or tax-exempt strategies in your current portfolios? If you do not have any tax advantage strategies in your financial plans, I would suggest you to sit down with your financial advisor to see which tax advantage plan is suitable for you. Do it as soon as possible. Also, please don't forget our current national debt is nearly $35 trillion and increasing at an alarming rate. What is your take on the future tax rate? Will our tax rate goes up? Or you think our tax rate will go down in the future? If you think the tax rate will go up, how will that impact your portfolio 20 or 40 years from now? So thank you for watching my video today. And if you find today's video is helpful to you, please click the like and subscribe button, and I will see you next time.